Hi everyone and welcome to Boothy Bites October edition. How's things, Boothy?
Yes, very well, Jackie. Thank you very much for checking in at nearly the last day of October to do Boothy Bites October edition. Where have you been?
Sorry about that. The reason why we're so late is because I have been trekking in Nepal. I made it to Everest Base Camp. Woohoo! And I made it back home, which is the most important part. So, yeah, it was me who has delayed the filming of this, but we got here in the end. We are filming it on the second last day of October.
We're rolling. Okay, so some of this news is dated now. Is that what we're saying? No one will listen anyway. Let's carry on.
No, you're so good that you're going to make sure that it's updated as we go, the info. All right, let's get into it. So let's start by chatting about partnerships because Lydian's Lending as a Service or LAS program is gaining a lot of traction. So can you explain how it works and the benefits it offers financial planning practices?
Yeah, very timely. I mean, so Andrew is fantastic. You know, he's out there engaging with a lot of financial planning businesses, and it's really cool that these planning businesses now are looking at, service propositions for their clients, trying to embed their clients, to them. Also, other opportunities, so we're talking about sort of economic opportunities, but also services that we can give to their planning team. So, we're engaging a lot of larger practices now with the Lending as a Service program. And what that means is basically the financial planning firms, they have a scale financial planning firm, but they're really are unsure about the viability of actually tagging on a full service mortgage broking business to them. So what we do is we give them that sort of fractional opportunity. So, we have the brokers, we have the operations, we have the specialization. So really for that business, it's plug and play. And that's great for them. The second part of that is then they can introduce and educate their clients on debt and property, which is really cool because, they're pretty primary assets for clients these days. And we can participate in the lending. And obviously there's commission and an income line for that practice if they introduce the services to the clients. So again, it's plug and play. It's an overarching extension to strategy, including property and debt. We're also able to sort of educate the planning team in some of the more sophisticated and complex credit, which is good. We plug in with technology through Sales Tracker and a few other different platforms to do this. We've got great brokers, we've got great operations, and I suppose lastly, on a regular basis, we can report on the progress of our relationship, which is really cool. So I think, in summary, it's a much more mature offering than we had sort of day one when it was the Boothy and Roxy show in our bedrooms in COVID. But, it's cool. And we're getting a lot more engagement and some great partners right now. So, yeah.
Yeah, absolutely. Now, with cash rates, CPI, and employment data constantly shifting, how are these indicators influencing the lending landscape right now?
Yeah, well, it's pretty timely. It's a good job that we delayed this catch up because we had the inflation figures yesterday, which came in a little bit higher than we thought. So, that's really put a bit of a hold on where the cash rate is at 3.6 now. Interestingly, I suppose the other element that the RBA are looking at is the unemployment rate, which was a little bit higher than what we felt it was going to be too. So really we've got sort of two pillars pulling separate ways. One, the inflation rate saying don't reduce, employment going higher saying, please reduce. But, really we're just sort of wait and see. So we've got another meeting I think it's a week. When did I say? When's our next meeting? Hold on. And then we've got one in December, and then we've got a bit of a break. So I really think we're on hold for the next 2 months. And then let's see what happens in February. I mean, there's a lot of crazy things happening around the world right now. And I think February is going to be sort of the time where we really have a clear direction of the cash rate. And that obviously overlays then with the lenders' rates as well. Yeah.
Mm-hmm. Yep. Definitely. Now, how should financial planning practices and brokers translate these economic trends into actionable strategies for their clients?
It's a really big question. So what Lydian tries to socialize with our partners is, not the normal home loans or the mums and dads home loans. Yeah. So yes, we understand their clients want to buy property. That's cool. I suppose we're here to do the hard ones. Yeah. And I know that sounds a bit crazy. The more complicated applications, we've got the quality brokers to be able to service those clients, those niches as well. And the products and the providers of the lending products that we have, we've got a great panel and some real good opportunities to fulfill a strategy which requires debt for those clients. So when we're engaging with our partners, the education of alternate sort of products is important for us. We're looking at intergenerational wealth conversations as well. So I know a lot of parents today, and I'm a parent now. 54. My kids are sort of 22. How do we help my kids get into property? Well, if I'm wealthy now and I've got my sort of advisor, my primary goal is to figure out how I can either distribute some cash to my kids, how I can maybe share some of the equity in my property to my kids to help them get a stepping stone onto that first property. Because potentially I've made a lot of money out of my first property or my properties through the years, and we want to get kids into homes and potentially get them closer to my house. Because if they're having grandchildren, I don't want to be driving 3 hours to go see them. I want them to be closer. I can do some pickups and drop-offs at school. So that, I know it sounds crazy. It's not strategy, but that's a life goal for many of our partners' clients. The second one as well, a lot of our partners' clients have got elderly parents as well. So these parents have probably got a big asset being a family home. Their advisors advising all of their the client's wealth, and potentially mum and dad need a bit of help with some cash and cash flow. Well, obviously that's going to break the strategy and the plans for the clients. Therefore, we're being introduced to speak to some elderly clients or catching mum and dad to support them for cash flow. So looking at reverse mortgages, bridge no end debt if they're downsizing and selling to get into new places, borrowing money to get into healthcare facilities as well. So we're doing a bit of that. So really, we're looking at strategies above and below the generations and socializing with our partners as well. Smart conversations, strategy and solutions.
Yeah, great. Love it. Now, major banks and non-bank lenders are offering a variety of options. Can you chat us through some of your faves at the moment, but without being biased?
Of course. Well, it seems Macquarie Bank's here on each line, so I don't know whether that's a good or a bad thing, but we do like Macquarie Bank. I mean, number one, we want a frictionless application process. So if we've got good credit, a good client, low interest rate, quick turnaround times, good banking product, and good credit policy, Macquarie Bank is one of our top providers. But that being said, CBA, NAB, Westpac, and the St George, the sort of that Westpac group have got great products. So our vanilla deals are typically going to the major lenders purely for the fact that good banking products and efficiency and service. Some of our niche clients who are more in social services or teachers, we're using like Teachers Mutual for those clients. We've got Bank Vic, who are looking after nurses, firefighters, police, and anyone who's in that sort of social services, which is great. So we do introduce back to those businesses which support those client demographics for employment. A couple of niches we've got right now is ING. ING's got some great fixed rates as well. And another tech platform which we do support, which is owned by NAB, is Ubank as well. So they've got a digital process, very well priced, really cheap interest rates, efficient lender, and again, so we support those guys. But I think right now we've got some really cheap fixed rates coming out because of the forecast of interest rates going down over the next sort of 6-12 months. So the fixed rates are below the variable rates. But the lenders we like, Macquarie Bank, Teachers, ING, Ubank. Who else have we got in there? And Kudos as well. Kudos Bank. And MyState. MyState, a Tasmanian one as well. So they're doing some good stuff in the investor interest only space.
Yeah, brilliant. Now, there's been some shifts in the Help to Buy scheme. What are some of these new changes that have been introduced?
Yeah, so again, that's sort of a bit of education for some of the advisors and the partners that we're dealing with. The cost to get into a property these days are being decreased. So the government help scheme or basically a guarantee scheme means that you can avoid the costly lender's mortgage insurance when you're buying your first home. And in fact, even if you're buying it's your first home after, I think it's a 10-year period. So we've just got to check the policy on that. Potentially, it could be your second home, but you've had a big gap between those days, yeah? But the cool thing the government has done is really what they've done is they've increased the value of the property you can purchase. So in New South Wales in particular, they've gone from 1 million to 1.5 million, which is cool. The second thing is in the old days, we had an income cap, which was around about $200,000. That's now been removed. So we have the ability now to to purchase a $1.5 million, and you can earn sort of $300,000-$400,000 combined income. I know that sounds a lot, but you can then purchase that higher value property. And in the old days, we had a limitation on places available for people buying. Well, that's actually gone now. So the same panel of lenders have unlimited spaces available. So it's good. So it's increased prices, income cap removed, unlimited places, and a lot more opportunity for first home buyers to get involved. And that has meant obviously that property market between sort of that $800 to $1.5 million is really red hot now in the marketplace. But again, great initiative from the government. Yeah.
Yeah, absolutely. And lastly, can you give us a quick roundup about what's happening at Lydian HQ?
Yeah, so I think with all these new partners and the partners that have supported Lydian for the last sort of four or 5 years, what we're trying to do is sort of give back, and what that means is that education piece, going back into the offices of the partners, talking through their client needs, and then sort of sharing some of the scenarios and stories and solutions we've helped other clients with, has really helped to sort of build the I suppose the Lydian momentum about why us. Like I said before, home loans and investment loans, yeah, we've got it, but all of these other more complex lending solutions we have too. So yeah, we've been out on the road and sharing those stories. The second really cool thing about it is because we're working part of the ensemble group with Roxy as well, we're actually able, because we've got accredited education packages, so content, presentations, and but basically, and the information we're providing to the partners, they're eligible for professional development points through Ensemble as well. So not only are we educating, but there's a value for the partners and their advisors in getting professional development points for doing that. So recently we did some strategies around that reverse mortgage, around that self-managed super fund lending, and helping kids into their first homes as well. So and the advisors get professional development points. So win-win-win. So we're on the road educating, which is really cool. So yeah, put my teacher's hat on.
Love it. Good on you, Boothy, and go Lydian. Well, that is everything from me. So Boothy, thank you so much for your time, and I guess we'll see everyone next month.
Yeah, probably in 3 days. That's it. So we'll catch you on Monday and we'll do November. I got nothing to say.
See you then.
It's a short segment. All right, Jackie, and welcome back from the heights of Everest Base Camp to to Brisbane CBD. It's good to have you back, girl.
Thank you. Good to be back. Nice to breathe air at sea level. It's a lot easier down here. Yeah.
Thank you. See you later. Ciao.